Okay, Cynthia, we're at 4 o'clock. I'll play the same role as last week if that works for you and just moderate us through this process.
Sounds good. Yeah, I want to first just mention a couple of Zoom rules. Is because there's so many of us on this call, if you would put all your questions into chat, and then Jim will moderate and direct questions to our speakers. We have 3 speakers today and one who may show up if she can escape a mound of paper. So Ken Troutman, you want to raise your hand so everybody can see you and know where you are? You just jumped on my screen. Okay, great. So you're there. And Julia Beatty may be joining us as well, Chief Lending Officer of People's Bank. Ken, of course, is the CEO of People's Bank. Many of you met him last week. And then we have Fred Reichensperger, who's a CPA. And Fred also knows a lot about the Families First Coronavirus Response Act, which is a tax credit act. And so he may be speaking about that as well. And if you have questions about that piece, you can direct them towards Fred. And then we have Dave Wright. Dave, you want to wave? Great. So Dave is CEO of Commercial Property Management and may be able to answer your questions about loan, about rent and mortgage payments and not mortgage payments, rent and lease payments during this time and what the PPP is supposed to be used for. So I'll just turn it over to Ken to give us an update on the PPP. I know probably everybody has talked to their banker or someone, and the information out there is spotty, but People's Bank is on it. And so we'll turn it over to him to speak for a while, and then to Fred, and then to Dave, and make sure that we have plenty of time for questions. So again, use the chat function for your questions. And anything else I missed there on the TF, Jim? Good. I think Jim is going to mute all of us so that we can hear the speaker.
Stand by. I'm going to mute everybody, then Ken, I'm going to open you up here.
Okay. Great.
Ken, can you hear me? I've lost Ken.
How's that, Jim?
Yep, good, thank you.
I unmuted myself, *6.
Perfect.
I'm not going to cover everything. We did an overview of the plan. Jim, can you hear me?
You're good.
I keep getting muted and unmuted, so
okay.
We'll see how it goes. Anyway, we're not going to cover all of the particulars of the plan unless someone has questions, and I would encourage those at the end. Let me give you an update on the bank. Through this morning, we had SBA approval, meaning we have funds set aside and reserved for clients for 210 of our not just our customers, we actually have some other community members. The total is 31 million. That's kind of an interesting number. We have 22 million in liquidity at the bank. So Jim, you better make a deposit to help us out. This is going to be a program that for us to fund it, we're going to have to borrow overnight to get funds into the bank to cover all of these loans. And we've talked to our regulator. There are some limits on what banks can borrow, just like I suppose all of you individually have those limits. We have our own. They're going to make sure that's opened up so we have the ability. We're kind of making a plea to the community. If you have deposits sitting somewhere, it'd be a good time to bring them into the banks that are making these loans so we can have access to those funds. Some things that we're still learning through the process. We started applying for money for our customers at 12:01 on Friday morning, 12:01 a.m. A lot of the rules weren't out yet. In fact, some of the application processes were still being designed. The note itself that we're using, there's a couple draft versions. There is not an approved version. We've got customers we're ready to fund on, and we can't do it until the note gets a final blessing. In the note, what's different about it, it has the language on the forgiveness. And so when you sign it, you're going to acknowledge that you're forgiven under certain terms and conditions, and there could be some limitations of that forgiveness if SBA decides that you didn't fulfill the full requirements One of the things we did learn that was a little bit wishy-washy during the process, we know they're trying to promote payroll. They want you to keep your employees hired or hire them back if you've laid them off. So and we know what the process for qualifying for the dollars is based on payroll and those related items that go in there. When you ask for forgiveness, no more than 75% of that, well, 75% or more of the forgiveness has to be from payroll. The other items that you have dealing with leases and debt payments cannot exceed 25% of the total. So make sure you track it close. There's going to have to be verifications on that. We have a little bit of time to figure that one out. You have 8 weeks to fund, to use the funds that you have. They have to be used for the permitted purposes that are on your application. We can cover those a little bit later if Julia gets on, if someone has questions on it, but it's not just a general working capital. There are 4 specific areas that the funds are qualified to be used for only. So biggest issue right now is just the quantity. Some of our bigger banks have reached a maximum and have shut off their participation. Wells Fargo is one of those. I know they're pleading for some more help from the regulator. They have a maximum of 10 billion, I think. They could actually fund the whole 350 billion themselves if it was opened up. So they're working on it. Some of our other players in the market I know are maxed out. We have probably more right now than we can handle for the immediate future, but we haven't closed it off. Jim Teese and his crew created a very nice process for getting your information to us. So if you go into our website and click on the PPP program, you'll come down to a drop-down menu that asks you some key questions, the name, address, and contact information. You send it to that. We assign a loan officer. You're in our queue then. We know what time you applied. You'll get automatic updates. And Jim, maybe you can cover a little more of what it does since you and Julia kind of developed that. But on that website also is the application, the rules, information sheets, and all the things that you're going to need to know. Jim, on your portal, why don't you give them an update on what it does for them?
Well, basically, the idea, Ken reached out to me, it feels like forever ago, but I think it was just before this was going to launch, and said, hey, we're going to get deluged with requests, and it's going to bury us. And so what can we do? And so we just basically came up with a process to help the team manage this this request funnel, right? So you think about all of the requests that come in, and it would easily bury the team that's not normally set up to take such a high density of requests for loan in a short period of time. So really, that's all it is. It just funnels it in and lets them control it. And it doesn't mean that it doesn't make the job easier for the team. It just kind of holds everybody in a queue and lets the team manage through the process. Kind of like working in fast food, if you will. During rush hour, your tickets line up, and that's what this is. This is just a ticketing system, and so we're happy to help.
Well, thank you, Jim. And just to kind of run through the choke points for everybody so they understand what we're working with. First step is to get an application and get the verification of what your qualification is based on your payroll. So you need some payroll records to do that. The information we have tells you how to calculate what your payroll totals are, and then you have your multiple of 2.5 times, that becomes your loan amount. The key then is get that back to us, and our first choke point is getting that approval into SBA using what they call the E2E system. I mean, it's a portal. We have 3 employees that are authorized to use it, but imagine you've got 5,500 banks nationwide with I don't know how many loan officers trying to access it. The system has bogged down. During the day, working hours, it's really slow. Our employees are working some pretty late nights, and it picks up a little bit towards the evening. So that's choke point 1. The second one then is to get the process a little more fine-tuned from SBA. Number one, let's get a note. Once we know what the note looks like, we can start creating loan documents for our customers. We can start funding. That's going to be another choke point. We've got a really talented, what we call our loan ops group, which all they do is fund loans and put it together, and they're waiting to go. But imagine we got 210 of them to do. Julia will maybe explain our process time-wise on that, but that's going to take a little bit of while. Getting customers signed up, trying to do it remotely, will take a little bit of work on that side. Then we'll fund. The money will go in. Now we got this 8-week period of you to use those funds for the approved purpose. Somewhere in the 7th, 8th week, we can then start processing the forgiveness documents, and the lenders have, I think it's 60 days. Julie, you might correct me if I'm wrong, to do the process on your forgiveness. A portion, either all or a portion of your loan will be forgiven. We have a CPA on, so they're going to deal with the tax consequences, but our understanding is the payment on your loan doesn't go to you, it comes to the bank. So there is not a tax consequence to you, which is kind of interesting because there's some free money, and I don't know who's going to pay the taxes. Nothing never seems to be free. So I'll be waiting to hear our CPA's discussion on that. Then you got 2 years. You don't start paying, or no payments, principal of interest for 6 months. Then the last year and a half is a principal and interest payment. Now that's kind of interesting too, because we're a preferred lender with SBA, which means we can modify our loans. We've talked about, would we want to have principal and interest? In some cases, prior to forgiveness, if it's not funded yet, that payment could be pretty big. So we're kind of working through that. I want to turn it over to Julie in just a second and see if Julie, did I miss anything, or do you want to add anything to the process that they should know about?
Julie, you might be muted. I don't know which one you are if you're calling in on a phone. It just lists phone numbers.
I think it's *6, Jim, to unmute.
Did that work, Jim?
Yep,
you're
up.
Okay. No, you know, Ken, I think that you've addressed things pretty thoroughly. I do want to confirm that you're right. The information that you gave with regards to the forgiveness, once a customer has made, once a borrower who has received these funds has made a request for forgiveness, they submit that request to the bank, and the lending officer or the bank has 60 days to give you an answer. So I wanted to confirm that Ken was correct on that. You also heard Ken's numbers, so we have about 210 loans that are literally queued up, ready to go through our loan operations department for the preparation of the loan documents or the loan package. And that's the documents that you, the applicants, will be signing. And so we're going to really have to resource that up when we get finally these final SBA documents that are part of that loan package. So that's going to be a pretty significant effort. We have a pretty significant queue of additional loan applicants, loan requests queued up, and we continue to receive many every day. So we're doing the best we can just to handle the volume as it's coming in. Probably from your perspective as an applicant, the thing that makes our job the easiest is to provide us with a very thorough and complete application package. And when you get correspondence back from the bank after making an inquiry, I think we've done a pretty good job of being pretty detailed as to what additional information you need to provide that will help us on our end to process the application quicker. That's really all I have, but I'd certainly be willing to entertain questions when we get to that point of the program.
I've got questions now if you guys are ready for them that relate to this.
Sure.
Okay, so from Gil, he's asking, what about companies that have payroll starting 8/19? I don't know what you know.
I think I know what he's, I'm wondering if he's thinking that he's a seasonal business and he opens in the summer. Do you want to get confirmation that that's the question?
Sure. Gil, can you unmute yourself
Yeah, I mean, in my case, it's a company that's existing for many years, but our payroll really started in August 19. And because we hire a certain time of the year, and we are now, our payroll is the highest now, you know, January, February, March. So how do you calculate it? I mean, do you start to 2020, January, February, or do you go for last year and you divide it by 4? I mean, what do you do? Or by 12?
What I'm advising is for those businesses that are seasonal, the covered period of this loan request or this program is February 15th through June 30th. That's the application what they call the covered period. And so what I would do and what I've recommended for seasonal businesses is to go back to similar period prior year and do a calculation of your payroll over those 3 to 4 months, and then do an average and multiply that average times 2.5.
And Julia, the program does describe seasonal businesses. I don't have that part in front of me, but we could sure look it up. If Jim can get a phone number or an email address, we can forward that. I think what you described is exactly how it's handled.
Mm-hmm.
Okay.
Next.
Okay, from Jeff, I've got, is People's Bank accepting applications from companies that are not currently checking account clients? If so, requirements and documentation is onerous? Is this correct?
You want me to answer that?
Yeah, I'll take that one. You know, right now we're taking applications in a priority format, and we're processing, I guess, in a priority. Our processing is our loan customers first, our deposit customers second, the customers of our customers. So if you have a relationship, one of our customers, a landlord relationship or some kind of a relationship, that would be third. And last would be all other customers out there. We would like to fund this loan into a checking account at People's. We do have to verify the Bank Secrecy Act requirements and the Know Your Customer requirements, which causes us to dig deeper into the ownership of the company. So all 20% owners would have to be verified. There is more work involved. It's by far simpler if you're processing at your own bank you're doing business with, but it's not impossible. There is some time constraints on this program. So I did hear today when I went home at lunch that they're looking at adding another $250 billion to the program as they recognize that the money's going quick. That has not necessarily been approved yet, but at least they're talking about it. So we might have some time to go through that paperwork. So I would suggest using the app we have online, filling out those questions, and then we can have an officer get back to you. We do have to do that next step, though, which is getting to know you a lot better. Our own customers already have all that due diligence done. I'll make one more comment that the volume has been so great, and we knew we were going to have an issue that on Sunday we contacted, I think, 8 college students that are home because their school is closed, and they are working for us now, and they're doing a lot of the background checking we're talking about. Julie will have them taking applications before long. They're answering the phones. They're talented, they're knowledgeable, and they're very, very trainable. So that's going to help us with our volume quite a bit.
Okay, thank you. Karen asked, is that on the E2E website or People's Bank? The link to the form that Ken was talking about is on the People's Bank website. And I put the URL in the chat, peoplesbank.bank, and it's underneath the business menu. After this call, I'll go ahead and put it other places as well. But really, you should go to peoplesbank.bank and find it there. Okay, Jeff, can you restate the terms are after 8 weeks? So what the terms are after 8 weeks.
Okay, Julia, you want to go ahead?
Sure. So the 8 weeks that you've heard reference to, I need to clarify for you. The 8 weeks is the period of time in which you need to use the loan proceeds from the date the loan is funded for the qualified purposes. And that's those 4 categories that we've mentioned: the payroll cost, rent, mortgage interest, and utilities. So that's the 8-week period. The deferment period is 6 months. You have 6 months after the loan funds of no payments due. And then at the end of 6 months, any amount that was not forgiven, you then have 18 months to pay back based on an amortization schedule over 18 months with an interest rate of 1%.
Okay, thank you.
Okay, thank you.
Let's see. Gary says, keep track of funds. We're thinking of opening a separate checking account that would run these funds through. What are your thoughts?
I think it's a great idea to keep track of those funds because if and when you ask for forgiveness, you're going to need to be able to prove or provide evidence of it as to how you spent those funds. So opening up a separate account, especially if you're going to be writing checks against that separate account and you can very clearly show how those funds were distributed, that would be excellent. But I want to also add that it's not necessary. In other words, for folks that don't set up a separate account, but you can show other forms of evidence that you had expenses for those 4 qualified purposes that were equal to or greater than the loan funds, that should be adequate. And can I quickly jump in and remind, I'm so sorry, but this is real important. It's important that in order to obtain maximum forgiveness, you have to use at least 75% of the proceeds of the loan for payroll costs. Keep in mind that salary, wages, insurance costs, benefits, etc. You need to use 75% of that for payroll costs. You can only use a maximum of 25% of the loan proceeds for the other 3 qualified criteria. If you use less than 75% for payroll costs, that portion won't be forgiven. But keep in mind too, though, that that amount you would repay over 2 years at 1% interest. So
Yeah. Okay.
Yeah, and to add to that, we had some clarification on wages. It's gross wages. So you don't add back your federal tax that you're withholding from your employees or your state tax that's actually coming out of the employees. That is not the way to calculate it. It's the gross wages for those employees before those taxes are paid and withheld.
Okay, thank you. Abigail asked, this new info about 75% payroll requirement, my business does not have any payroll expenses, but does have other qualifying expenses. Does this mean that I have no forgivable options under PPP? Can I apply at all, even if just using it as a loan with normal repayment terms?
absolutely she can apply, and she could get up to 25% then for the operating expenses. The remaining 75% she would amortize over 2 years. What I would recommend is that you take a look at the EIDL program, the EIDL. That program doesn't have the first of all, there's an initial $10,000 that's considered a grant. And that program might be a better fit for you depending upon what size dollar need you have, because it doesn't have that requirement as to 75% going to payroll.
And really the problem with the PPP program for a company with little or no payroll is you don't qualify for much of a loan. Because your loan is based on your payroll and those qualified payroll expenses times 2.5. So if you don't have any times 2.5, you don't have a loan to speak of. And so the other programs might be better.
Okay, good point. Jeff asked, what if you tripled the size of your business due to an acquisition and are seasonal?
Oh, gosh. Wow. that would take a good look-see on the part of the officer. You know, that's a real one-off, and that's difficult to answer. That one would just require some good discussion between the applicant and the lending officer.
Okay.
The guidance does provide, if you're a new business and you've just started, that you can take the average of January and February. It's got to be all the information before February 15th. That would average for your qualifications. So.
Yeah, because this is Jeff. The acquisition was done last summer in July, so we have half of a year, and the seasonal period was then, and then we have January, February, March of this year that's at the triple level because of the acquisition. So they would look at that recent payroll data, I would think.
Yeah. And the nice thing is it's the monthly average of whatever you have. So most companies are going to use 12 months of 19 to figure out what that is. If you've got 6 months and you can document your payroll both before and after, then I think you'll be fine.
Okay, great. Thanks.
Okay. Nicole asked, if there wasn't any payroll last year during the seasonal period, what period is used? Another special case.
Julia, that's a tough one.
Could you repeat the question, Jim? I'm sorry.
Sure. If there wasn't any payroll last year during the seasonal period, what period is used? So I guess that's, I would think for something like that, you just want to fill out the form and get in the process and let an officer deal with them, right?
Yeah. Yeah. The spirit of the program is this: for those to get people back to work now. And so, if you didn't have payroll, yeah, I'd have to take a look at that. I guess I'm not quite understanding the question or the scenario.
And some of these are a little complicated. They took an existing program called SBA 7A and made modifications to it to try and get a fast track program. The problem is the SBA 7A has a standard operating manual that's thousands of pages long that covers eligible and ineligible businesses and gives every scenario you can possibly think of, which including what we're talking about now. What they did then was take that manual and say these businesses that were previously uneligible, for instance, nonprofits, and said they're now eligible. Now they've come back and said, okay, of those 501c3s, some of those are churches. The manual used to say any faith-based organizations are not eligible. They now came out with an amendment that said they are. So they're doing some special one-offs to the rules. Every bank has been opened up to this program. Not every bank's a preferred lender with SBA or even a certified lender. Some of them have never done one. And they're going to interpret these rules as they go through. The scary thing is when you ask for forgiveness, you got to make sure it's an eligible business. Otherwise, you've got a 1% loan with deferments for payments for 6 months, which is not exactly what everybody wants to go through with.
Okay. Let's see. Hank asks, is there a way to find out where you are in the queue without bothering you?
Well, that's what Jim was supposed to do for us. Jim, how does that work?
That's not quite yet set up. So, so the answer is you can't find out without giving us a call. What we're going to try to do, Ken made reference to these college students. One of the things that I'm going to try to implement is a means by which they can reach out to our applicants at least approximately every 48 hours to let them know where they're at, if they are still queued up, if they have been reviewed and are in the stage of getting SBA authorization. Right now, we're just simply trying to work through this massive flood of initial applications that we really don't have the resources yet to do that. But assuming in the next few days we can get through this big bubble in the pipeline, then we're going to actually have these college students reaching out to our applicants, letting them know where they're at in the process.
And what Ken was alluding to is we have this Kanban board of all of the work that's going through, and there's all, Julia has like 10 steps that every loan has to go through. And at some point, you'll be able to just log in and request where is your application in those 10 steps. So it's not so much, oh, you're fifth in line, it's you're moving down the process. That's really, it's not a queue like, hey, Hank, you're fifth in line, hang in there. And then, hey, Hank, you're fourth in line, how's it going? So, yeah, yay. It's not like that. It's more of what step in the process are you in, but we're still rolling all that out. Okay, Karen says, are you asking for additional documentation from 501c3 applicants?
There is additional documentation needed from nonprofit organizations, but it's not too extensive. It's a particular form that we have to have you fill out.
Okay. Dawn asked, does the forgiveness 8 weeks start when funded and not end on June 30th?
The 8 weeks, so the way we understand the June 30th time frame is that loans have to close before June 30th. So if a loan, this is the way we understand it, there may be some additional guidance on this, but if a loan closes on June 30th, they've got 8 weeks to spend the funds for which they're going to request forgiveness. Does that answer the question?
This one's a little dicey. And we're trying to figure out how to help our clients. We have customers that their business has been closed, their employees are gone, and the state still won't let them open up. So one of the challenges is, can we get you approved, withhold funding until you can open up again by law, and then start your 8 week period? We're still waiting for clarification. We had gotten we get emails on the programs hourly almost, and one of them came back, hey, you got to close your loan 5 days after getting your approval to SBA. Well, we don't even have a note yet, so that's just impossible. So we're trying to work through it. We really want to help our clients get the best bang for their buck. And so if you're a restaurant that's closed and you've got 90% of your employees laid off, and you have to spend 75% of your loan funds on employees, you sure don't want to spend it on them when you can't open. And so if we can push that out, we sure will. Julie's exactly right. We're going to wait for more guidance, but every bank, I think, is asking the same question of the Treasury and the SBA to get some clarification.
Okay, thank you. If I'm an this is from Shelley, if I'm an LLC with 2 members treated as a sole proprietor, is my own paycheck counted as payroll?
There is a separate calculation that is done for sole proprietorships, and I don't know the answer to that, to be honest. I would have to take a look at how that would be factored in. I would think that if it is, I'm gonna hesitate to answer it further because I would have to do some more research on that.
Okay.
If we can get an email, we'll get an answer back. We can
Yeah.
guess. That's not going to help you on that one.
Okay.
Mm-mm.
Okay, and that's all I have for questions for this section. So thank you, Ken and Julia, as always, very appreciated. And so Cynthia, turning it over to you now. And you wanted me to remind you of a couple of things, so I'm reminding you of those things right now. Oh, you're muted. Hold on. Can you unmute? I'll do it.
This this call and the call, am I unmuted?
You are. You are.
Okay. So this call and the call last week were put together by Entrepreneur to Entrepreneur, which we visit different businesses every month. And this issue just seems so relevant. We wanted to make sure that we got people some information right away. We'll also be sending you a link or some information about a webinar on how to do your social media marketing during this time that Gretchen Palmer is going to be doing. And so look out for that. But for the second half of this call, we have both Fred Reichensperger and Dave Wright here, and I want to make sure that they get some time to answer your questions as well, because we haven't talked at all about this Family First Coronavirus Act, which is a tax credit. So Fred, I can't find you in my little tiny ribbon, but I'm sure you're there somewhere. Would you take a few minutes and just tell people about that and let them ask questions about how that works and can work in their favor as well as the PPP?
Yeah, so can you guys hear me okay?
Yes.
Yes.
Okay, so a couple things. There were a lot of other tax changes that came with the CARES Act. And I know with my client base, the PPP was front and center. Everyone was trying to get in line to get those applications in with their various financial institutions. But there were a lot of other changes. And so I think it's important to sit down with your CPA and kind of talk through those, because they did remove some of the lesser taxpayer friendly issues that were put in during the last round of tax reform with the TCJA for the 2018 tax period going forward, basically to allow more losses, to be able to create carrybacks, to be able to get prior taxes that you've paid, which they hadn't had in the past. So I think it's important to note that too. I mean, the PPP was definitely what grabbed everyone's attention, but there were a lot of other sneaky changes in that bill that are very taxpayer friendly. They may not be the immediate source of cash like the PPP loan may be, but they're also there. I also think it's important to note that there were there's kind of 3 different programs that were in the CARES Act to help employers. There was the PPP program, which has by far been the most popular, but then there was also an employee retention credit, and then also a potential deferment of FICA taxes, or like the 6.2% employer side payroll taxes. Those items, it's important to note that if you do the PPP program and you want to have debt forgiven, you can't do the retention credit or the FICA deferral. So it's kind of important to get your ducks in the line and do some pencil to paper to see which one's the most beneficial for you. from what I've seen in a lot of analysis I've done, as well as just other third-party analysis for kind of the standard business size that I work with in the Rogue Valley, the PPP is by far the most beneficial, but again, it's just you don't want to box yourself in a corner. And then Cynthia did also mention that there was this FFCRA. It was some reform that went in actually before the CARES Act, and I think kind of got overshadowed by it. First off, it created a requirement for employers under 500 employees to provide additional covered sick and medical time. So it actually comes with some governmental, or some requirements or additional oversight that's there, really to provide additional payment for people that may be impacted by this. I think the biggest one I've seen, thankfully, because we haven't had a gigantic corona outbreak in the Rogue Valley, is that if you have folks that are unable to work because the schools are closed or the daycares are closed, and you have where people are making difficult decisions on who's going to stay home and watch the kids, that they may be eligible for payment for that, that the employer's on the hook to pay them for that time that they're gone. It's at a reduced rate, but they're still need to be paid for that time. But conversely, that cost can be defrayed by 100% tax credit against those wages and payroll taxes that are paid for those wages. So it's working with your payroll provider, your CPA, to figure out, do I have people that are eligible for this? Am I paying them in accordance with this expanded FEM law? And if I am, how do I calculate and receive that credit? It's generally going to come through on your payroll tax filings, but there are ways to get advanced funding on that as well too. So just important to note, I think there's a lot of different things in there that, the PPP got the lion's share of the press, but there are some additional items. Probably the biggest one that I've seen for my clients is that they changed qualified improvement properties. So if you've done any retrofits to a building, or if you hold a lot of real estate and you've done improvements to buildings, there was what was a drafting error back during the TCJA that made that a 39-year property and not eligible for bonus depreciation. They fixed that with the CARES Act. And so you can potentially file an amended tax return and get 100% of that build out expensed for the 2018 or 2019 tax year and claim those refunds. So that is a potential real term benefit on there for smaller to medium sized taxpayers.
Okay. Any questions?
I'm glad the tax guy could put everyone to sleep. So.
Well, everybody's
Yeah,
just
that's great.
happy
I
that
mean, my recollection, Fred, is that and I think you mentioned this somewhat, is that people can use some of that tax credit for childcare if people aren't covered for childcare expenses, if they're sick or if they have to work as a healthcare provider during this time. Is that right?
Yeah. So it does have, it's very all encompassing. It got overshadowed a lot by the CARES Act, just given that it had $2 trillion in the title and the PPP had $346 billion of funding. It just got a lot more attention, but it's important to note that all these different opportunities out there, because every little bit helps.
Great.
I have a question. This is Jeff Jennis. Is there any thing in the CARES Act to make previously non-refundable tax credits refundable?
There's, in terms of what type of credit are you specifically thinking?
Well, I'm specifically thinking about some rehabilitation tax credits for historic properties, but I think it would apply to any non-refundable tax credit that people have on the books.
No, not that I've seen on those. I mean, they did do some changes to net operating losses, allowing carrybacks, which had previously been taken off the books. Also, they've done some work with AMT tax credits for corporations that had AMT tax paid in the past, but I'm not aware that it impacted any of the non-refundable credits like solar or rehab or any of those type of credits. However, they are, I guess, in sort of the fourth round of this, so I think everything's on the table in terms of what changes they might make.
Okay, I have,
Thank you
Go
so
ahead,
much.
Jim. We've got a few tax questions. Go ahead.
yes. From Abigail, I've got, what's the best route to discuss the FMLA benefit? Do you reach out to your employer?
I would say yes. I mean, actually, the IRS and the DOL websites are a great reference for it to get like your feet wet. I was surprised at how well they were written. And then I'd also say reaching out to your employer, understand what the expanded FMLA and sick leave are, and making sure that you qualify and letting them know that so they can properly track it.
Okay. I have a question in here that says, can I listen to this again later? I've had a couple of interruptions, and the answer is yes. We record it and we put it and share it out there after the call. Gary asked to clarify, if you applied for the PPP loan, can you use the Family First Protection Act as well?
Yes, my understanding is that the two don't preclude one another. However, given how fluid the situation is, and the FFCRA was drafted first and came out a few days, and then I think they scrambled to get the CARES Act in place because they saw how quickly the economy was seizing given all the uncertainty. There's certain items within the CARES Act that preclude you from doing one thing or the other. However, I'm not aware of anything in the FFCRA or CARES that preclude you from doing one or the other. I do believe, though, that if you do get credits for eligible additional sick time or the expanded FMLA for like someone who's home having to take care of children, that those amounts, one, wouldn't be able to be eligible to calculate your PPP base, the 2.5 times average payroll. And I believe that it also wouldn't allow you to use that in the calculation of your forgiveness at the time too, because in essence, you're double dipping, then you're getting wages paid by PPP, which I probably missed the biggest part of this whole thing, and Ken alluded to it, is that, if it's spent on the right things and forgiven, typically under tax law, if you have debt forgiven, it's going to be a taxable event. It's right in the CARES Act, in the forgiveness section, stating that it will not be subject to federal income tax. And then Oregon has a rolling conformity to the federal tax law. So as it stands now, it would also not be subject to Oregon income tax. So again, if you use these funds for the proper buckets, again, being payroll, which is broadly defined, it includes benefits for rent, utilities, or the interest on debt payments incurred prior to February 15th of 2020, and those amounts are forgiven, it's tax-free. So it's tax-free money to you, and so that's why I don't think you can double dip and get the tax-free. Basically, you're paying expanded FMLA and getting the tax credit back for that, so that's tax-free money. There's a lot of double dipping up on Capitol Hill, but that's one thing they won't let you do.
Okay. Ken had raised your hand. Ken, go ahead. Oh, hold on, Ken, you're muted somehow. I didn't mute you.
I muted myself. How's that?
Okay.
Hey, one thing we might want to do is bring on an HR specialist, because the Family Leave Act, there's a whole bunch of rules that apply just from the HR side, not even talking about taxes or that PPP program. So I think that would be a benefit of the group. The other question, Gretchen, what about the CAT tax in Oregon? Is there any momentum gaining to push that back?
Yeah, that's a good question, Ken. I mean, so they did get Oregon to acquiesce a bit, not on the CAT tax that I'm aware of, but on just standard, individual income tax and corporate income tax that would have been due 4/15 has now been pushed back to 7/15. So for federal returns, your individual return or corporate return now is due July 15th. And that's also an extension to file and an extension to pay. So it's an automatic to that. Your payment isn't due. Also, your first quarter federal payment isn't due till July. So it's kind of an odd mix where you may actually have your first quarter payment after your second quarter payment, because as it stands now, second quarter payments are still due June 15th. And then for Oregon, the one quirk is that they also match the federal deadline in terms of moving the federal or your Oregon filings to the same 7/15 deadline and payment, but they still want you to make first quarter 2020 estimated payments by 4/15. For a lot of my clients, just given the economic uncertainty, I've been advising them, you need to kind of pencil it out. But given that typically your Oregon payments are much smaller than Fed, just given the tax rate differential and the uncertainty that we have here, that maybe you just forego that first quarter payment and sort of hold on to the cash, because right now it feels like cash is king. To answer your question, Ken, I don't believe that there haven't been any changes on the CAT tax. So for those in the room that aren't familiar with that, there's a new tax that was implemented that's effective for this year. It's the corporate activities tax. The corporate name is misguided because it applies to basically all business done in the state of Oregon, regardless of form. So whether you're a sole proprietor, a partnership, an LLC tax as a partnership, an LLC tax as an S corporation, whatever you may be, if you have over $1 million of commercial activity, basically think gross receipts based in Oregon, you're going to be subject to this new corporate activities tax. And the first estimated payment on that is actually due here April 30th. And it doesn't seem like Oregon's willing to budge much on having that done. That being said, they're also, given that they haven't had a whole lot of guidance out, I feel like a good faith effort to do that calculation. They're not going to throw up their hands. The unfortunate part about it is that it's a modified gross receipts tax, and when I say that, I mean that it's based on gross receipts, not on profits. So you could have, $1.5 million worth of revenue. You do get a subtraction for either 35% of your payroll costs, or if you're more of a widget manufacturer, think cost of goods sold. But it's a modified gross receipts tax, meaning that if you have receipts, regardless of how profitable you are, and you're above the threshold, you're going to likely have to pay CAT tax. However, estimated payments aren't required if you have under a $5,000 expected liability. And so that requires about 1.8 million of estimated or of Oregon sourced commercial activity in the state of Oregon.
Great, thank you, Fred. And I'm going to encourage people, Fred sent out some really very clear memos. Is it okay if people send you their email address so that you can stay updated on these things? He's done a great job providing links and worksheets on all of these programs. So
yeah, certainly.
We'll make sure that you get a contact for him if you're willing to keep sharing that. And then there was one more question that I want to make sure Jim gets to before we move on to Dave. Thank you, Fred.
Yep.
Thank you.
Yeah. So somebody just reminded me that I accidentally skipped a question. So Daryl asked a question, and that's I applied for the EIDL $10,000 loan and have had no response. Any idea about a timeline? So that'd be Julia and Ken.
Yeah, I think Julia stepped away. Those should be processed just as fast as the bank can get the information they need to do. And if it's not subject to the call-in we're trying to do right now, it's the E-Trans system for the PPP. So I don't know if that's to our bank. Jim, maybe you can track where that's at. And
Jim, I'm back. Can you hear me?
Yes.
Yeah.
Okay. Just a reminder to everyone, the EIDL is the program where you apply directly with the SBA via the SBA's website. And we know that there has been tremendous volume on that. And I haven't gone in to get an update on that program because we don't really have any involvement with the application process. I'm not at all surprised that you haven't heard anything back. Even the SBA portal, what we call the E-Trans portal, which is the portal we use to get the SBA authorization on these PPP loans, even that has crashed a time or two. So they're just absolutely flooded with requests. So I'm not surprised that you haven't heard.
Okay.
But Julia, they could actually, since they haven't heard, start a PPP. You just can't use the same funds for both programs. So if you haven't been approved, haven't been funded, and the PPP works, take that route.
Okay, thanks. Fred, I'm going to go ahead and mute you now, and we're going to unmute Mr. Wright.
Hello.
I have to find your video. Hold on.
Can you hear me?
Yes.
Okay. Well, now we get to talk about rent. I thought I'd just kind of briefly go over the executive orders that the governor signed the last couple of weeks. The first one was a moratorium on evictions kind of in late March, but it didn't have a lot of definition to it other than that they weren't going to send the sheriff out to do lockouts. But then she signed on April Fool's Day, which I don't think was a fool, the Executive Order 20-13, which further defined the eviction moratorium. And so this basically extended the eviction moratorium for residential and non-residential tenancies starting on April 1st for 90 days, so essentially through June. That's where no actions can be taken for non-payment of rent in residential and non-residential tenancies, including late fees charged during this time period for those people and businesses that are affected by COVID-19. I thought on the non-residential tenancies, since that is probably what a lot of you all are may have leases with, I'd read the part of that order that applies. It says on non-residential tenancies, the order does state that it applies if a tenant provides the landlord within 30 calendar days of unpaid rent being due with documentation or other evidence that non-payment is caused by, in whole or in part, directly or indirectly, the COVID-19 pandemic. Acceptable documentation or other evidence includes, without limitation, proof of loss of income due to any governmental restrictions imposed. So essentially the order goes on to say that's not a waiver of rent. You know, the governor made that clear in the order. And so if people are unable to pay the full rent when due, the tenant should notify the landlord as reasonably as soon as possible, and shall make any partial rent payments to the extent that the tenant is financially able to do so. So, you know, my advice to our clients and to our tenants is, you know, we'd like to have communication, reach out to us. So if you're in a lease and you haven't paid yet and you're affected by COVID-19, which most probably are, reach out to your landlord and talk to them about what's going on and see what you can pay and what maybe could be deferred. What I'm seeing on some of the commercial leases is, especially for businesses that are shut down right now, like gyms and restaurants, some of the restaurants and whatnot, the landlord is deferring April and May and tacking it on the back end of the lease. If they're in a triple net lease, they're kind of asking for the tenant to at least pay the operating expenses so the property can continue operating, and then work out the payment plan on the balance on the base rent. So, you know, what we've been kind of just communicating with everybody is we're all in this together. You don't want to get to the end of 90 days, especially on the residential side, and even the non-residential side, and have a large balance and not have any way to get back on top of it. So I don't know if there's any questions.
I've got a question from Colleen. If a homeowner wishes to return to their home for their own use or sell the home, is this still permitted?
You know, that's a good question, because it is technically the last year when they passed the rent control bill, they also eliminated no cause notices for tenancies over a year. And so there's 4 exceptions to that. You can give a 90-day notice if you're going to be moving back into your home, or if you're going to be selling it and the buyer is going to be occupying it, or if you're going to be tearing it down and pulling it out of the rental market. This eviction moratorium basically says that any no cause notice or non-payment of rent can't be acted on, but for cause still can. So there's a little bit of gray area on that. I would think that you still may be able to do that. I could do a little checking if you want to email me, and I'll follow up on that.
Okay,
There
great.
is a little gray area.
Okay. Jen, you had your hand up?
Yeah, just a comment. I got a call today from a person that listened to one of our radio spots, not a customer of ours, that was extremely offended. Went on quite a discussion for 5 minutes on my voicemail, and I called him right back. What we've been advertising, we had watched what's coming up and how the process is going on, and there's been all this feeling that everything's free, that nobody has to pay anything. And so what we wanted to caution everybody is, if you have the ability to make payments, make your payments. They're not going to be forgiven completely, and it gets really hard to catch up. And so the radio spot actually said that you're getting government money coming up, and in some cases you're still working. Use that money to pay your debts and actually spend it in our community. We need activity. We need our businesses supported. I probably could have been a little more clear that I wasn't talking about those that are laid off and are waiting for that first unemployment check and are trying to figure out how to buy groceries and pay for medical. That's not what I'm talking about, but that's a pretty small piece right now. The Unemployment Act is going to help a lot of people out with some big increases and some extensions on it. Then those federal checks should start, I think, next week. So my advice was stay current. It's tough to catch up. And that was with everybody, your landlords, your tenants, your mortgage, your car payment, all of those things if at all possible. And if you can't, call and talk to them. That's the key here. Get a hold of them in advance and tell them what the story is. So I apologize if I offended anybody on this room with my commercial, but I never intended to. I was trying to be helpful, and I turned out maybe not quite so much.
No, I appreciate that, Ken. And that's kind of been the message we've been saying. It is a little difficult sometimes. People do take offense to it. But on the residential side, you know, we've actually had pretty good response from tenants. They've been pretty genuine about what they can pay. And then we have a hardship application that we send them if they can't pay and it's due to the COVID-19. And so far, I was looking at our collections on the residential side. The non-residential side, some of the payments are coming up due now on the 10th, and so we'll see how the collections are. But on the residential side, we're about 15% off on collections today versus a month ago. So it's not terrible, and we believe we can't reach out. We can't do a 72-hour notice like we normally would for non-payment of rent. So we're going to be calling those people that haven't paid and just try and work through the process with them.
Okay. Is there any, for somebody that has commercial space for rent and I've got tenants in it that are businesses, are there any differences there?
Not necessarily. The big thing is communication, like Ken said. What we're hearing is for somebody that's completely shut down and they don't have revenue in, they don't have a lot of reserves. We reach out to the landlord, and the landlord's been pretty understanding. And what they've done is kind of deferred at least April, and like I said, have tacked it on to the end of the lease. And so we'll see what happens coming out of this. But the big thing is just making sure that your tenants are communicating with you so you know where they stand. And if they can pay at all, it's going to be helpful so you can continue to operate the property. That's one concern is, you know, that maybe people just stop paying altogether, and then, you know, we still got the landscaping, common area utilities, a lot of things, insurance, those kind of things that we need to take care of.
And the mortgage, right?
Well, and the mortgage in a lot of cases, yeah. Talk to Ken about that.
Yeah, and Jim, to tack on to that, our state regulator has asked all state chartered banks, and there are 14 of us left in the state, that they wanted about a half dozen things that we would agree to do, and our bank has agreed to all of them, and I think most banks will. Number one, we won't foreclose on any businesses for the next 90 days, which I think all of us agreed to that. And we won't even start foreclosure. We should be working through, hopefully, the PPP program, which helps pay those, will keep these businesses current. We've agreed to waive late fees, overdraft fees on accounts. People are going to be running tight. not a time to penalize them. We're waiving ATM fees if you go anywhere. You might need cash. You shouldn't carry a lot of cash right now. It's not the safest thing, but you can get access to cash anywhere without any fee. There's a list of other things that we're trying to do. I think everybody realizes this is totally unique. We all have to work together on it. Our goal is, frankly, to get everybody back. Let's get things back to normal where everybody's working. We had the lowest unemployment rate forever, and now we're going to one of the highest in a 2-week period. We've not ever seen that before, so it's a very unique times.
I did have one tenant on the residential side tell one of our property managers that they just weren't going to pay. They're not going to pay at all, and they're just going to wait for us to go out of business, so they won't have to pay ever. So not much we can do, but his balance is going to be accruing, that's for sure.
Yeah. Okay.
Great. All right, well, I really want to thank all 4 of our speakers today. That was super helpful. You can tell that each one is a wealth of knowledge on these different topics. And so, you know, if we can, we will, if we can, we will give you their email addresses so that you can contact them if you have other questions. I did notice one other question in the comments in the chat that says, did I misunderstand? I thought I just heard you say it isn't a good idea to carry a lot of cash at this time. I think what Ken was referring to was green money in your wallet. Is that right? You don't mean in your bank balance.
Right. It's not, we've had people want to withdraw $10,000 because they thought they needed cash to get through the crisis. That is a bad idea. You have access to all your electronic means work, your debit card, your credit card. You don't need to carry an amount of cash for what if. That's not safe. I don't encourage that. So.
Okay, great. Just wanted to clarify that one. So, we will give you some information about Gretchen's workshop. I think the idea of finding an HR speaker is a good one too. We'll see if we can pull that together, and encourage you to just stay on top of the E2E emails. Jim does beautiful summaries of these, and we'll send out a link for this call if you want to rewind and hear something again. Anything else you want to add, Jim?
No, that's it. So we'll update everybody with an email, and appreciate all of you getting on here. And is this working and you want to keep it going? Because Cynthia and I, this isn't what we thought we were going to be doing. We're happy to do it if you feel that there's value in it. So just let us know.
Great. I got 2 thumbs up from Gary and from Jessica. All right. Well, we'll see you next time. Thanks again, Ken and Julia and Dave and Fred. Really appreciate it.
Thank you, guys.
Thank you.
You're welcome.
Thanks, everyone. Stay healthy.
Yeah.